What's shaking, crypto fam? Get ready to strap in because the news cycle is moving at warp speed and you're getting the absolute latest, right here, right now, on Bitcoin Bulletin. We've got major institutional plays, market shifts, and expert insights that you absolutely cannot afford to miss. This is your essential download for what's happening in the wild world of digital assets. Let's dive in. First up, we're talking about massive corporate moves. One of the biggest players just made a colossal Bitcoin purchase, sending shockwaves through the market and pushing prices to new heights. This isn't just a small dip of the toe. This is a full-scale embrace by major corporations, and we've got all the details on who's buying, how much, and what it means for the future of Bitcoin. Get ready for some eye-watering numbers. Next, we're shifting gears to analyze recent market movements. Bitcoin has seen a significant pullback from its recent highs, and the big question on everyone's mind is this the start of a continued slide or a temporary correction before the next leg up? We're breaking down the factors at play, from whale activity to potential shifts in monetary policy, to give you the most informed perspective. You won't want to miss this analysis. Then, we're diving deep into the performance of another titan in the crypto space. This digital asset, second only to Bitcoin, is making waves with its own unique developments. We'll explore why it's being hailed as a true gold standard by prominent investors and what strategies are being employed to generate yield on these holdings. Get ready for some high-level insights. And finally, we're looking at the broader implications of these trends. How are these institutional adoptions and market corrections shaping the long-term outlook for digital assets? We'll be examining expert predictions, historical patterns, and what these developments mean for the average investor. Stick around, because this is crucial information for navigating the crypto landscape. Don't forget to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Let's get this started. Corporate giants' massive Bitcoin haul fuels price surge. In a move that's sending ripples across the financial world, a major corporate investor has executed a colossal purchase of Bitcoin, acquiring a staggering 4,048 BTC valued at approximately $449.3 million. This significant acquisition has propelled Bitcoin's price past the $111,000 mark and underscores a growing trend of institutional adoption that's reshaping the digital asset landscape. The investor, identified as Strategy, has now boosted its total Bitcoin holdings to an impressive 636,505 BTC, representing a substantial investment of $46.95 billion. These strategic acquisitions were reportedly financed through a series of at-the-market ATM offerings, including the successful raising of $471.8 million from various ATM programs between late August and early September 2025. This aggressive accumulation strategy is not an isolated incident. It mirrors a broader wave of corporate interest, with other significant entities like Ming-Xiang Group and KindlyMD also making substantial Bitcoin purchases recently. To further fuel these acquisitions and attract institutional capital, the company has also pioneered innovative Bitcoin-linked financial instruments, such as preferred stocks offering high coupon rates. This surge in corporate backing is having a tangible effect on Bitcoin's market dynamics, according to strategists at J.P. Morgan. They've observed that with corporate treasuries now holding over 6% of Bitcoin's total supply, volatility is being effectively dampened. This institutional presence acts as a stabilizing force, akin to a private sector quantitative easing, bolstered by the increasing availability of sophisticated financial products like Bitcoin futures and exchange-traded funds, ETFs. The commitment from major corporations, including Trump Media and Technology Group, GameStop, and Metaplanet, which have collectively invested billions in Bitcoin since early 2025, signals a significant evolution in how traditional finance views and integrates digital assets. Meanwhile, in a parallel development, the Ethereum Foundation has announced its intention to sell 10,000 ETH, approximately $43 million, to support its crucial research and development initiatives, grant programs, and charitable donations. The foundation plans to manage this sale through a series of smaller, staggered transactions over several weeks to mitigate any potential market impact from a single large sell-off, adhering to its treasury policy of maintaining a balanced portfolio. This move comes as Ethereum itself experiences a remarkable surge, with its price climbing over 23% in the last 30 days to surpass $4,326. This rally has been partly fueled by speculation from Ethereum co-founder Joseph Lubin, who suggests that Wall Street's eventual adoption of ETH could eclipse Bitcoin's role as a monetary base, a sentiment amplified by hints of potential rate adjustments from Federal Reserve Chair Jerome Powell. Despite Ethereum's impressive gains and the growing institutional interest in digital assets, Bitcoin continues to hold its ground as the dominant digital asset by market capitalization and institutional adoption. Analysts are drawing parallels between Bitcoin's current trajectory and the historical performance of gold following record highs. If Bitcoin follows suit, it could see a further 30% increase in the next 3 months, potentially reaching between $135,000 and $145,000. Some projections even suggest a full repetition of past gains could lead Bitcoin towards $200,000 to $400,000 over the next year, positioning it as a high-beta asset that often outshines gold after its record-breaking moments. However, caution is advised as certain technical indicators, like a bearish divergence on Bitcoin's weekly relative strength index, RSI, have historically preceded sharp market corrections. What does this massive corporate buying spree mean for Bitcoin's next move? Stay tuned as we break down the critical factors influencing Bitcoin's price and the broader crypto market. Bitcoin's post-record slide: what's driving the downturn and what's next? Bitcoin, the undisputed leader in the cryptocurrency space, with a market capitalization exceeding $2.3 trillion, has experienced a notable shift in momentum. After a remarkable rally that saw it gain over 90% in the past year, the digital asset has recently stalled, experiencing a decline of nearly 12% from its August peak as of September 2nd. This pullback occurs at an intriguing juncture, particularly given the historical correlation between falling interest rates and positive Bitcoin performance. Federal Reserve Chair Jerome Powell's recent indications of a potential easing of monetary policy had led the market to anticipate a rate cut at the Fed's September meeting, a scenario typically favorable for cryptocurrencies. Adding another layer to the narrative is the impact of recent political developments. Since Donald Trump's presidential election victory in November, Bitcoin has demonstrated exceptional resilience, often outperforming other cryptocurrencies that faced various challenges. The Trump administration's approach, characterized by deregulation within the crypto sector, the appointment of pro-crypto advisors, and even the proposal of a U.S. strategic Bitcoin reserve, has created a more favorable regulatory environment. This regulatory clarity has encouraged significant capital inflows from institutional investors and mainstream financial institutions, who now operate with reduced concerns about regulatory hurdles. Despite the positive signals from monetary policy and regulatory fronts, the market recently witnessed a significant disruption. A so-called flash crash occurred when a major Bitcoin holder, often referred to as a whale due to the sheer volume of their holdings, abruptly sold 24,000 Bitcoins, a transaction valued at approximately $2.7 billion at the time. This massive sell-off triggered a sharp decline, pulling Bitcoin's price down from its intraday high of over $124,000 per token to around the $111,000 mark. While recoveries often follow such dramatic price drops, this particular dip has persisted longer than many investors anticipated. The nervousness could be contagious, potentially prompting other large holders to book profits after an exceptionally strong performance period. Furthermore, a palpable sense of uncertainty surrounds the Federal Reserve's upcoming decisions. Crypto investors are expressing concerns that the Fed might not implement the anticipated rate cut in September, or that future rate cuts may not materialize as expected. The final economic data releases before the September meeting, particularly concerning job reports and inflation figures, could significantly influence the Fed's stance. Stronger than expected economic indicators might lead both the market and the Federal Reserve to reconsider or delay monetary easing. It's crucial to remember that Bitcoin, still a relatively young asset class at about 15 years old, presents inherent unpredictability. Market behavior can be erratic, and unforeseen events, like large-scale selling by whales or shifts in macroeconomic policy expectations, can dramatically impact prices. Should economic data deter the Fed from cutting rates or alter market expectations about future cuts, both Bitcoin and the broader crypto market could face considerable downward pressure. This is partly due to the inverse relationship often observed between rising interest rates and the strength of the US dollar, which historically trades inversely to cryptocurrencies. However, looking beyond the immediate volatility, the long-term outlook remains optimistic. Many market participants view Bitcoin, with its finite supply of 21 million coins, as a form of digital gold, serving as a hedge against inflation. Supportive initiatives, such as Donald Trump's executive order simplifying Bitcoin's integration into retirement portfolios, and endorsements from major asset managers like BlackRock, which suggests allocating small portions of portfolios to Bitcoin, further bolster this long-term conviction. Historically, Bitcoin has demonstrated a remarkable ability to recover from significant downturns, often reaching new all-time highs. This resilience suggests that the current correction may simply be another chapter in its ongoing growth story. Will the market's optimism about potential Fed rate cuts continue to drive Bitcoin higher, or will selling pressure prevail? We'll keep a close eye on the economic data and Fed commentary for you. Bitcoin's August peak and subsequent drop, analyzing the market's reaction to Fed signals. Bitcoin, the world's preeminent cryptocurrency, boasting a market capitalization exceeding $2.3 trillion, has recently experienced a notable downturn. After a year-long surge that saw its value increase by more than 90%, Bitcoin's rally has stalled, resulting in a nearly 12% decrease from its August peak as of September 2nd. This market behavior is particularly interesting when contrasted with Bitcoin's historical tendency to perform well amidst falling interest rates. Federal Reserve Chair Jerome Powell's recent remarks signaling a potential shift towards easing monetary policy had led many to anticipate a rate cut at the Fed's September meeting, a development that typically boosts the cryptocurrency market. The market's performance has also been significantly influenced by political shifts. Since Donald Trump's presidential election win in November, Bitcoin has exhibited remarkable strength, often outperforming other cryptocurrencies that have faced various hurdles. The Trump administration's policy direction, which includes promoting deregulation in the crypto sector, appointing advisors favorable to digital assets, and even proposing the establishment of a U.S. strategic Bitcoin reserve, has fostered a more conducive regulatory climate. This environment has encouraged substantial investment from institutional players and mainstream financial institutions, who are now more confident in allocating capital to the crypto space with reduced regulatory apprehension. Despite the positive signals from monetary policy indications and regulatory advancements, the crypto market recently encountered a sharp disruption. A significant flash crash occurred when a substantial holder of Bitcoin, commonly known as a whale, offloaded 24,000 Bitcoins, a transaction valued at approximately $2.7 billion at the time. This massive sell-off precipitated a rapid decline in Bitcoin's price, pulling it back from its intraday high of over $124,000 per token to approximately $111,000. While market recoveries typically follow such sharp price drops, this particular downturn has persisted longer than many investors might have expected. It's plausible that other large holders, witnessing this event, are now seeking to secure profits after a period of exceptionally strong gains, leading to further selling pressure. Compounding the uncertainty is the market's growing apprehension regarding the Federal Reserve's future actions. Investors are expressing concerns that the Fed might not proceed with the anticipated September rate cut, or that subsequent rate reductions may not materialize as projected. The forthcoming economic data, particularly concerning employment figures and inflation rates, will be critical in shaping the Fed's decision-making process. A robust jobs report or higher than anticipated inflation data could prompt the Fed and the broader market to reassess the timing and scope of monetary easing. It is essential for investors to recognize that Bitcoin, as a relatively nascent asset class with only about 15 years of history, is inherently unpredictable. Market dynamics can be volatile, and external factors, such as large-scale liquidations by major holders or shifts in macroeconomic policy expectations, can exert significant influence on prices. Should economic data hinder the Fed's ability to implement rate cuts in September or alter future expectations, both Bitcoin and the wider crypto market could face substantial headwinds. This is partly due to the inverse relationship often observed between rising interest rates and the strength of the US dollar, which historically tends to move in opposition to cryptocurrencies. However, the long-term perspective remains largely positive. A significant portion of the market views Bitcoin, with its capped supply of 21 million coins, as a digital equivalent of gold, offering a hedge against inflation. Furthermore, policy actions, such as Donald Trump's executive order designed to facilitate the inclusion of Bitcoin in retirement portfolios, and the acknowledgement from major asset management firms like BlackRock, which suggests that investors can comfortably allocate a small percentage of their portfolios to Bitcoin, reinforce this long-term confidence. Bitcoin has a proven track record of recovering from significant price drops and subsequently reaching new all-time highs, suggesting that the current market correction may be a temporary phase in its ongoing growth trajectory. Will the market's anticipation of Federal Reserve rate cuts continue to support Bitcoin's price, or will persistent selling pressure lead to further declines? We will continue to monitor the economic indicators and Federal Reserve statements for further insights. Kevin O'Leary declares Bitcoin and Ethereum true gold standards, revealing portfolio dominance. Renowned investor Kevin O'Leary, widely known as Mr. Wonderful from the television show Shark Tank, recently shared his strong conviction in the cryptocurrency market, highlighting that Bitcoin and Ethereum constitute nearly 90% of his digital asset holdings. In a statement made on Tuesday, O'Leary referred to these two leading cryptocurrencies as the true gold standards of the crypto world. He elaborated on his investment strategy, emphasizing that beyond simply holding these assets, he has developed sophisticated strategies to generate yield on his positions, drawing parallels to receiving dividends or bond interest. This dual approach of holding and yield generation, he stated, is why he regards Bitcoin and Ethereum with such high esteem. O'Leary's significant allocation to Bitcoin and Ethereum comes at a time when the broader crypto market is showing signs of renewed institutional interest. Bitcoin was trading at approximately $111,119.12 on Tuesday evening, marking a 1.66% increase. Ethereum, while experiencing a slight dip of 0.18% to trade at $4,317.58, remains a key component of O'Leary's strategy. The overall cryptocurrency market capitalization reached $3.82 trillion, reflecting a 1.34% increase over the preceding 24 hours. Market sentiment, as measured by the Crypto Fear and Greed Index, has shifted from neutral to greed, partly spurred by institutional activities such as Strategy Inc.'s substantial purchase of roughly $450 million worth of Bitcoin. Furthermore, Bitcoin spot exchange-traded funds, ETFs, recorded net inflows of $260 million as of Tuesday, according to data from Soso Value, indicating robust institutional demand. Beyond his direct holdings, O'Leary has also diversified his crypto exposure through strategic investments in key infrastructure companies within the digital asset ecosystem. These include stakes in Circle Internet Group Inc., Coinbase Global Inc., and Robinhood Markets Inc. O'Leary has consistently observed generational shifts in how digital assets are being adopted. He notes that younger investors, particularly Gen Z, are now integrating Bitcoin and Ethereum into their investment portfolios alongside traditional stocks, often using platforms like Robinhood. This behavior suggests a growing perception of digital assets as having the same fundamental merit as stocks or bonds. Even with Bitcoin trading approximately 12% below its all-time high of $124,457 reached in August, on-chain analytics firm CryptoQuant suggests that this pullback is not unusual. The firm points out that typical bull market corrections often range between 20% to 25%. Therefore, the current price movement could continue without necessarily breaking historical patterns. This perspective aligns with O'Leary's long-term bullish outlook on these foundational cryptocurrencies. How significant is Kevin O'Leary's endorsement of Bitcoin and Ethereum as the gold standards of crypto? We'll continue to track the impact of these high-profile endorsements on market sentiment and institutional adoption. And that's a wrap on today's Essential Crypto Briefing. We saw massive corporate buying push Bitcoin past $111,000, analyzed the recent market dip and its potential causes from whale sales to Fed policy, heard Kevin O'Leary's high praise for Bitcoin and Ethereum as gold standards, and explored the broader implications for institutional adoption. Don't miss out on any of the action. Make sure to hit that like button, subscribe to Bitcoin Bulletin for all your crypto updates, ring the notification bell, and let us know your thoughts in the comments below. Plus, follow us on all our social channels for even more insights. We'll see you next time.